Denver's housing market feels calm right now. That's exactly what makes this moment dangerous. Under the surface, pressure is building, and by 2026, we could see prices jump by 10 to 15%, maybe more. And by 2030, well, if you're sitting on the sidelines, you may not be able to afford a house at all. In this update, I'll show you where the market stands today, why experts believe prices could explode in the next year or two, and what risks could hold things back, and most importantly, what it all means if you're thinking about buying in Denver right now. If you're new here, my name is Landon, and I'm a local realtor here in Denver, and I help people find the right home in the right neighborhood, whether you're buying your first place or your forever one. So let's dig into whether Denver is about to explode or if buyers still have time to play catch up. All right, so you may ask, where are prices right now? So the average price in the Denver metro area is $795,000. And that has definitely been hoisted up by the luxury market. We are seeing a high volume of luxury homes selling right now. I just had one that we listed, and before we even got to market, it sold. And so it is happening, and that market continues to be pretty hot because those luxury buyers aren't as affected by the interest rates with where they are right now. The price of single family homes has gone up 1.1% year to date, where the price of condos and townhomes has actually gone down 3.86% year to date. And when you look at inventory right now, inventory is actually going down a little bit. It's a seasonal adjustment leading into the fall. So we've gone from 14,500 homes at our high point all the way down to about 12,500 homes today. That's the entire market in the Denver metro area, and it's actually pretty common to see that happen and see inventory start to trickle down during the fall. So that pattern is staying true, and it's a good thing to keep our market a little more balanced, because economists have always said 12,000 homes at one time is a balanced market in Denver. However, these migration patterns are much slower in our Denver area compared to 2010 to 2020, when we were one of the leaders in the country as far as people moving into our town. That's not the case anymore. Also, market activity, buyer activity. What is happening there? We've seen a lot of buyers enter into the market lately with interest rates dropping from 7.25% down to about 6.25% right now. It's really helping a lot of people move into affordability. And that's the name of the game right now, is can I afford a payment in today's market? And truth is, a lot of buyers are being active right now, because at 6.25, now I can get a 2-1 buy down and start at 4.25, and then 5.25 the next year, and then 6.25 thereafter. And there's a lot of hope right now that interest rates will continue to drop. And, with the Fed chair possibly being replaced in May, that we could possibly see interest rates continue to trickle downward. And so we're seeing a little bit of optimism for the first time in a while, which is a sign that we might see things going in that direction. Pending sales actually jumped 8% in August, showing that buyers are still active, especially when rates dip. And here's the kicker. Over the last 15 years, Denver has grown faster than the national average, and that steady population growth is the foundation for what's coming next. So if today feels balanced, why are so many experts warning that prices could explode in 2026? Let's look at the forces that are building under the surface. So you may ask yourself, why could Denver explode in value over the next few years? The Denver metro area is expected to add 1.2 million people by 2050. There's a lot of relocation and demand from Californians, people on the East Coast, and remote workers that continue to try to live where they want to live. And the mountains are our biggest attraction. So you get the mountains, Red Rocks, all the great downtown scene with the nightlife, ball games that you can go to, Broadway musicals. We've got, incredible bars, coffee shops, restaurants, lots of things that attract people here in very walkable areas. And so there is a lot to like about Denver. So right now, seasonally, builders are keeping up with demand for this season. But keep in mind, 3/4 of our annual appreciation happens in 3 months, from February to April, every single year in our market. And so on the overall picture, builders are not keeping up with the long-term demand that our population size is demanding. And so as they continue to fight through regulations and restrictions on building, and also fighting through zoning laws and, costs, that limit their supply, they're still not keeping up with that long-term demand with our population size that we have in our market. Also, homeowners are sitting on record equity. So keep that in mind. And there's about to be a huge transfer of wealth from baby boomers that are now, in their twilight stages, passing along a lot of their equity and wealth to the next generation. And that next generation, most likely, because they have a strong foundation and belief in home ownership, is going to want to put that into real estate. And so you may see a spike because of the increased demand of that next generation, and also the first-time buyer generation that has been struggling for the last 4 or 5 years, that is now getting to a more comfortable space where they can actually consider buying a home financially. Also, when you look comparatively about some of the most desirable places to live, if you're looking at coastal cities like San Francisco, Seattle, LA, Boston, those are all more expensive markets than Denver. So it's all relative. I know a lot of people on my videos have commented about how expensive Denver is all the time. And you're right, it is very expensive compared to other areas, right? But it all just depends on what you're comparing it to. But if you're a person that works from home, makes great income, and can live anywhere, Denver may still be a value city for you compared to some of these other areas that I mentioned. But before you assume that prices are guaranteed to skyrocket, let's talk about the risks that could slow things down. So we have to consider, what could happen as well, right? There's always a worst case scenario that could happen. And, let's say mortgage rates just stay high and, go back up to 7-8%. That could absolutely slow things down. Mortgage rates right now are at 6.27% at this point in September. And so it's the lowest that we've seen in the last 11 months, according to the Wall Street Journal. If rates stay above 6.5% to 7%, affordability definitely tightens, and that becomes a slowdown in the market. Also, insurance premiums or property taxes here in Colorado could continue to rise, making it a less affordable market and less desirable place to be. There could be a national or global recession that could happen. There's just no controlling world events, right? And what could come of it. And so that's another thing that could be, a risk going forward. And it could absolutely slow migration down and job growth down in our market. Our job market here in Denver is strong in tech, aerospace, green energy, but it's vulnerable to downturns, that could come up in some of those industries. The price of oil and gas absolutely affects our market because that's how we started, was an oil and gas town. So those are all things to watch out for. So while the long-term fundamentals are strong, there are short-term risks that could keep prices from running away too quickly. So what does this mean if you're a buyer trying to time the real market? Let's get into the real takeaway. So if rates normalize and prices increase 10 to 15% by 2026, by 2030, affordability could be out of reach for many buyers right now. And so just think about 10 to 15% in our market. That's another $100,000 on top of our average price. That may really affect things, if you're trying to get into your first home, especially. If you're riding that equity wave and that money's yours, you're a part of that growth that we have in our market. So that's one way to think of it, and I think that I see comments on my posts all the time from two different sources, right? From people that already own a home that are riding that equity wave, and people that aren't owning a home that are on the outside looking in. And it's a challenge, and I feel it for you. I know it's hard to look at home ownership from the outside looking in right now because things have gone up in price so much. And so I understand both sides and I get it. So depending on which side you're on, you're hearing this differently. But numbers don't lie. And the truth is, we have that potential if rates continue to drop for this market to take off and have another run, since we have not grown in the last 3 years. So keep an eye on premium suburbs, Boulder, Cherry Creek, Wash Park, Virginia Village, the university area, Cheeseman Park, Congress Park. These prime areas in Denver will likely pull away even further, and entry-level homes, which are under $500,000, are already scarce, and that market could absolutely vanish and go away. So Denver's major developments like the River Mile project that's coming up, and now with the Broncos' new stadium that's been announced in Barnum Yards, that stadium is now clearing out their old stadium and creating all that space where the River Mile project might get even bigger if the Kroenkes buy that and take that over. And so that River Mile project could create an entire new downtown in our city. And, the projections that they already have and the plans are incredible. Between that, the Ball Arena project that's going to take up a lot of new construction all throughout the Ball Arena parking lot. And then you've got, the new Santa Fe Yards, the professional soccer stadium with buildings that are going to be all around that. and several other projects going on in our city, you've got a lot of growth that will make Denver even a more attractive place that they would want to come to here between now and 2030. Bottom line, if you wait for prices to prove you wrong, you may be waiting a lot more. So if you're serious about buying, here's what you should do next. If you're planning to buy in Denver before 2030, don't wait for the headlines to confirm what we already see coming. Reach out today and let's find you the right home before the next wave of buyers drives prices even higher. And if you want to avoid the biggest pitfall buyers are making in Denver right now, check out my next video on the #1 mistake people make buying in Denver. Click right here and I'll see you there.